Good morning, everyone, and welcome to our legacy program sponsored Small Business and Freelancer Tax Boot Camp. If you're not familiar with the legacy program, we are a financial literacy nonprofit where we are dedicated to ensuring that all communities are equipped with um, the financial information necessary to make life choices, and so that we can continue to build legacy and financial wealth within our communities and our families. So, without further ado, I would like to introduce you to our director of the legacy program, Teresa McDuffie. And our speaker today, we have a really great speaker. Her name is Shamika Small. She was raised in Augusta, Georgia. By day, she is a high school business teacher, and she has been an educator for over 20 years. So hats off to her for imparting knowledge on our youth for a long time. So the courses that she focuses on is entrepreneurship, personal finance, and Photoshop. She's a graduate of Augusta State University and has a bachelor's in accounting and a graduate at Strayer University with a master's in business. In 2003, she received a vision to start her own business. And so, she was diligent and obedient in answering that call, stepped out on faith, and started helping those who needed assistance with tax preparation and financial literacy. She is highly qualified and registered with the Internal Revenue Service as a practitioner and provides tax preparation services in all 50 states. So without further ado, I would like to turn it over to our speaker this morning, Ms. Shamika.
Good morning. Thank you, Lacretta and Teresa. Can everybody hear me well?
Yes.
Okay. So, without further ado, I've been kind of at this for a pretty long time. I started when I was in college, and of course, grew to love it. And one of my specialties that I've kind of focused a lot on in the last, I would probably say 7 or 8 years, has been small business. Because I realized that there's sometimes there's not a lot of help out there for small business, but then there are some resources that have come up in the past probably 5 years maybe. But because they have so much going on, it's hard to kind of figure out where to start. What information do I actually need? It's so much information out there. One of the things I want to focus on is just kind of honing in on some of the most important parts of a small business, the tax side of it, because that's what I do is the taxes of it. No matter what business you start, all the tax stuff is the same. Um, and so I want to make sure that as a business owner, or even if you're thinking about starting a business, because it's not just for people who already own a business, but it's for those of you who are interested in starting a business, like you want to get the information, as much information as you can, um, in order to start that business as well. So we're going to talk about small business and freelance textbook boot camp today. Everything that you need, well, as much as you need to know to get your business started. So, so we're going to talk about hopefully by the end of the session, I'll get you to understand how the business taxes work, which deductions that you may qualify for, how to avoid those common mistakes that can kind of cost you on the back end. And then hopefully you'll feel confident in preparing your own taxes if you prepare your own taxes, or when you go see your tax person, you'll have all the information that you need to be able to get your taxes done this tax season. So I want to start out just to kind of get a little background on my audience. How do you currently earn your income? Are you a W-2 employee like myself, and you're also a freelancer like myself? Do you just own a small business? That's your main gig? Are you thinking about starting a business? If you can't scan the QR code, if you can just do slido.com and just type that code in. Just want to kind of survey the audience real quick to kind of see what where we are. Okay, so it looks like most of us are W-2 employees, and then we have some that are small business owners as well. Okay, so that's good to know. So let's dig into the personal taxes versus business taxes, because I want to make sure we kind of understand um, the difference between being taxed yourself, because a lot of you put in there that you do have a 9 to 5 or whatever shift you work. And then you might also have a business on the side. So understanding that you pay taxes yourself on your W-2 income, and then you're also having to pay taxes on your business income. And we'll kind of talk a little bit about how the taxes work when it comes to your business, but just understand that all of those transactions that you're doing for your business, whether you sell products or whether you sell offer services for your business, you're expected to pay taxes not at the end of the year like most of us think in January when you file your taxes, but you are expected to do some type of accounting where you're paying into on your profits throughout the year. So we'll talk a little bit more about that as well. And then the tax forms that you're going to be using on your personal taxes, of course, it's the 1040. But when you're operating as a business, the type of tax form that you use is based on what business type you are. And I'm going to talk about those business types as well, so that you can kind of understand how your business should be taxed. Maybe you might decide to change up the type of business that you have. Determined based on whether or not how, well, I would say how you would want to be taxed, would be based on your business type. And so you may decide you want to change your business type to something else, just to kind of separate the two. And we can talk a little bit more about that as well. And then, of course, the deductions, because there are certain deductions that you can claim for personal, but then there's also certain deductions that you can or cannot claim on your business taxes. And we want to make sure we understand the two so that we don't cross our personal deductions over onto our business side and vice versa. Because the last thing we want is to get in trouble with the IRS, because we're kind of mixing up the two. Okay. And then we're also going to talk a little bit about the employees, um, because, of course, if you're hiring people to work for you, there's also some tax implications that you want to make sure you understand as well. So let's talk about the business structure. What business structure are you, and why does it matter? Automatically, if you operate by yourself, you're the only owner. You're considered a sole proprietor. You don't have to file any paperwork to tell them you're a sole proprietor. You don't have to fill anything out. You're just automatically considered to be a sole proprietor. So just one person that owns the business, you're a sole proprietor. When you are a sole proprietor, you're going to file a Schedule C with your personal tax return. And what that is a form inside your taxes that you'll prepare, whether you do it yourself or whether your tax person does it for you. But you're going to be using a Schedule C, and that's where you'll report all of your income, all of your expenses, as a Schedule C, I'm sorry, as a sole proprietor type of business. So that's the form that you'll be using if you just operate your business by yourself. If you are a partnership, that's two or more people, of course. Um, Also making sure that if you are going to be a partnership, that there's some type of agreement that you all have established. You always want to have some type of partnership agreement, so that you and your partner understands that you're going to be reporting this, your income and expenses on a totally separate return. And so that return, that form is called a Form 1065. And then what you'll do is you and your partner will both fill out the Form 1065 with all the business taxes, business income and expenses. And then whatever is left over is going to get reported onto your personal return. So you'll still have to file the partnership return, send that into the IRS. And then whether or not you have a profit or loss, the profit gets reported, the loss gets reported. So whatever you have, whatever you made as a partnership then gets reported onto your personal tax return. Then we have our S corporations, and that's just basically a small version of a corporation. They've kind of become a little bit more partner. Sometimes I suggest it to some of my clients just because it allows you to separate your business from yourself. If you're a sole proprietor, you can't separate your business can't be its own entity from you. If you're an S corporation, you can separate the business from yourself. You can also pay yourself as an employee under S corporation versus if you're just a sole proprietor, you can't be a W-2 employee for yourself. You just take your own profits and you spend your own profits as a sole proprietor. But if you have an S corporation, then you can actually be an employee of your business. So that's just for those of you who might be considering to totally separate your business from yourself. Just understand that there are requirements for that S corporation. Of course, you have to file with the IRS, fill out paperwork to become an S corporation. And then, of course, you're going to be held to filing an individual business return separately from your business. And the same thing with the partnership, whatever income or in W-2 if you're S Corp, and whatever income that you have left over from your S Corp gets reported onto your individual tax return as well. And then the last thing I want to talk about is LLC. I know a lot of times people get confused about LLC. LLC is really just limited liability company. It's really not federally. It's a state statute. If you're going to declare to be a LLC, it's only state level. The IRS recognizes it, but only because of the state statute. And so whether you have an LLC or not, you're still going to be taxed as if you were a sole proprietor or partnership or S corp. So it's not just your LLC by itself. You're still going to either be a sole proprietorship or partnership or a S corporation with the LLC status on it. And what that really does is it just allows you to have a certain type of liability separate from your personal. And that's why I explain it to clients is that when you add a LLC onto your business, what you're saying is that if, let's just say someone come after you and sue you, they can't come after your personal assets. They can only come after your business assets. So that's really what a LLC does. Tax-wise, though, it does nothing because the IRS still goes back to whether or not you're a sole proprietor, partnership, or a corporation. So that's kind of the difference of the business structures and why those matter. Now, when you start to open up your business, or if you are already in business, part of what I wanted to explain is kind of what is taxed. So there are several things that can be taxed. Of course, if you're selling products and certain services, of course, you have to charge a sales tax. And I know if you live in South Carolina, and particularly Charleston County or Dorchester County or Berkeley County, there's certain percentages that you have to send to the state. When you do sales tax, there's also a little 1% tax that you have to pay to your county. So just kind of understand that if you're selling goods and you're having to pay sales tax on those goods, that you have to make sure, first of all, you register for a sales tax permit. You're collecting the sales tax from the customers, so you have to charge that sales tax on to your customer. And then, of course, you'll pay that tax into the South Carolina Department of Revenue, or if you're in Georgia, the Georgia Department of Revenue. So you'll send those taxes into the state, and then of course your local county office as well, because you do have to pay an additional, I want to say it's additional 1 or 2% to Berkeley County, and Charleston County has the same thing. Um, and then over to the right, I just have like a little bit of chart that I did of things that's just commonly not taxable. So of course, like if you open up a grocery store, most of your groceries have a small tax that they pay, but it's not like the regular tax that other goods are taxed at. Most prescription medicines, of course, medical service, if you offer a medical service type of business, those are not commonly taxed. Your doctor, if you have a doctor office or legal services, most of those are not taxed as well. Most legal professional services like accounting services or legal services, those are not taxed. And then, of course, the educational, if you have like an educational type of business and offer like tutoring services or other types of educational services, those are different types of businesses also that are commonly not taxed. And then other things that are taxed, of course, would be if you hire employees, you're required to have payroll tax. So if you decide to hire employees, of course, you always want to make sure that you have them fill out a W-4 form. And these forms are found on the IRS website. So you can just simply go to the IRS and type in the W-4 and print them out for the employee that you're hiring. But always make sure that they fill out a W-4 form. You're not going to send that in to the IRS, but if you've ever audited, and they ask for that W-4, then you got to make sure you have those things on file. So there's just certain paperwork that you want to make sure that you keep on file. The I-9 is going to be another one, especially for the your W-2 employees. You want to make sure that they fill out the I-9, that you verify that they're legally allowed to work in the US. And that form should tell you where to send that into to do the verification. And then if you hire a 1099, if you hire a contractor, you want to make sure that you get them to fill out the W-9 form. And that's just so you're able to send them a 1099 at the end of the year if you pay them more than $600. So anybody that you pay over $600 for as a contract worker, you're required to send them a 1099 I would say at the end of the year, which would be normally January of that next year, because you have to send those out by the end of January. So the payroll taxes are going to be important if you're hiring employees or whether or not you're doing 1099 contract workers. The other big thing is going to be hiring your kids that are under 17. This is really a really good tax deduction for those of you who have children that are under 17 and you want to put them to work. Just understand, you really can't do a 1099 contract work for children under 17 just because those are going to be job duties where you have to tell them what to do. And so you still want to use them as a W-2 employee, not that you have to take out taxes or anything because most of them under 17 are exempt from taxes as long as you're not paying them more than that standard deduction, which is the 15,750. So as long as their pay is under that for the entire year, you can just simply write them a check for it, but we still want to consider them a W-2 employee and not a 1099 contractor. And what I mean by that is that just make them fill out a W-4 form. Again, those forms are not going anywhere, but it just solidifies the fact that you're hiring them as a W-2 employee and that you have their W-4 on file. And then you can just simply write exempt as far as taxes go so that you're not having to withhold any taxes. So every time you pay them, of course, you don't have to worry about the taxes on that. And that's going to be a huge tax deduction for you because, of course, you get to write off your payroll expenses for any employees. And then you're saving on the tax implications as far as your kids go because you don't have to pay out the Social Security, Medicare taxes like you would if you had a regular W-2 employee. That's not your kids. Now, once you are taking those taxes out, And one of the things you want to do is a lot of times when we have businesses, we wait to the end of the year, we make our money month to month, and then we wait to the end of the year to figure out how much taxes we would have paid on that money. And oftentimes we get hit with a hefty tax bill because we didn't realize. Oftentimes, sometimes when, especially when we're not as good as keeping up with the amount that we have that we're making from month to month. Sometimes we don't realize how much we've made from our side hustle or our business that we have. And then we get hit with a hefty tax bill. And so that was one of the reasons why I wanted to make sure we understand that you don't have to wait until tax time. Technically, we're not supposed to wait, but most businesses kind of wait until the end of the year to figure out the taxes that they should pay. You can start doing that now. Instead of getting hit with that hefty tax bill at the end. And so one of the things you can do is pay your federal income tax as you go. So you can pay those taxes as you go. If you pay yourself every 2 weeks with your business, there's a tax, and I have the link on here that'll kind of guide you, and I'll send that to the Legacy program so they can send this PowerPoint out to you. And it'll have all the links where it'll take you to the tax table and everything that tells you how much taxes that you would need to put to the side. And normally, what I would do is do it by month. Take your taxes out. If you pay yourself every 2 weeks, then you can just base it off of the profits that you get for those 2 weeks. If you do it monthly, you can base that tax off of that month, send it into a separate account, and then just send that in quarterly. And this is those 4 quarters broken down. Anything that you make before April the 1st, you'll make that payment on April the 15th. Anything you make between April and May, you'll pay that the taxes on that income on June the 15th. Same thing with June the 1st to August 31st. You'll pay the taxes on that on September the 15th. And then, of course, anything after August to the end of December, you'll send that quarterly tax payment in by January the 15th of the following year. And that just kind of helps you kind of get a little consistent with paying your own taxes on the profits that you're making from your business every single month so that when you get ready to do your taxes, again, you're not hit with that hefty tax bill on all of this income that you're making, especially from, because I have quite a few clients that do real estate, and or clients that make a huge percentage off of the sales of different types of items. And of course, we know that some of those are like pretty large commissions that sometimes we get from our side gigs, and the taxes on that, you don't want to get hit with that hefty tax bill. So it's always just good, even if you just put it to the side, but just kind of make a habit of sending it in quarterly if you can, to kind of get into the habit of being a little bit more studious with the tax or the quarterly tax part of it. Now, once you withhold those taxes and kind of set them to the side, where exactly are you going to send those payments to? So they have several different ways to go. Um, you can send it in by mail. Of course, you can just fill the form out, write a check, and then just send that by mail. You can also pay over the phone. The IRS has a phone number where you can pay them online. I'm sorry, pay over the phone. I find that the easiest, I don't know about the IRS To Go app. They do have an app. I've never used the app before, but there's an option for you to be able to do it through the app. I myself do the online version, so you can pay online. It's just easier that way because you already have an IRS account anyway, especially if you've already been working and paying into the tax system, and it's directly related to your Social Security number. So if you have never been on, you just simply create an account, and then you're able to just go online. You're going to tell them how much you're paying. Because again, this is just self-reporting. So you're reporting however much estimated taxes that you would have paid on or that you should be paying based on the amount of income that you made. So you're just self-reporting, paying online. And then, of course, at the end of the year, you're able to go in and download the amount that you paid into the system because then that's going on your tax return as taxes that you paid. so that you're not again hit with that hefty tax bill because now you show that these are the taxes that you paid throughout the year. So far, is there any questions that anybody have about the tax implications so far, estimated taxes?
Yes, we have a few questions in the chat. So the first
Okay.
question, which category from the previous slide do nonprofits fall under? So it was a slide where you were listing out the different business categories.
Which tax? Say that one more time.
Which category from the previous slide do nonprofits fall under?
On the business structure?
Yes, it was this slide.
Okay, that's the one I thought. So nonprofits have a separate category and a separate return that they're filing. It's called a 990. That's the form that nonprofit companies are gonna file for tax wise. And for nonprofits, it's really just a reporting term because you're not paying any taxes or anything. So you're just basically reporting all of the donations or grants or revenue that the nonprofit has got throughout the year, and then all of the expenses that you spent it on. So you're just reporting everything that came in and went out throughout the year, and you're required to report that every year.
All right, hopefully that answered her question. The next question, it may have been the slide after that one, Shamika. It talked about, does it have to be your child? And then the follow-on question was, how do you legally pay yourself with your LLC? I thought you weren't able to give yourself a 1099.
So if you're the tax breaks as far as family members go, it does have to be your child. Now you that doesn't say you can't hire family members, but the tax implications part, you do have to take taxes out on other family members. But if it's your child, no, because you're claiming your child on your taxes, so that's the deduction that you get because it's your child. If it's just any other family member, again, you're still having to treat them as regular employees, even though they're family. And what was the other
Right.
question, Greta?
The first one before that was, does it have to be your child? And then the second one was, how do you legally pay yourself? And then,
So,
oh, when you finish that one, I have another one for you.
okay. So when you're operating a business, you so how you pay yourself really is you're just profiting off of your business. So you can decide how much of that profit you're going to put into your personal business. You're really not paying yourself as a sole proprietor because everything that you make is yours. You're paying taxes on it regardless of what you make or what you lose, profit or loss. So you really, it's no really pay yourself. Um, for a sole proprietor type of business because you can't be an employee of your business. So you're really not paying yourself. But what you can do is you can, in your mind, you can pay yourself by saying, this is how much I want to put into my personal account every single month from my business. But legally, there's no paying yourself when you own your own business as a sole proprietor, if that makes sense.
The last question in the chat, my business is project-based and does not make a profit each month. So would I file zero taxes for that month and file taxes accordingly for the profitable months?
Yeah, so when you're doing the quarterly tax payment, and they'll ask you, like, it'll have on there how much you're making each month. So when you report, of course, there'll be months if you weren't making anything, you'll just put zero, for those months. Yes.
And we did get one more question. When does your hobby become a business or business become a hobby? Is this based on earnings?
So the hobby becomes a business, mostly when it has to do with the amount of income that you're bringing in, anything over 600 really. is not considered a hobby. Because at that point, if somebody's working for you and you pay them over 600, you have to send them a 1099. And then if you're spending in excess of more than 20 hours a week on it, it's definitely not considered a hobby.
All right. And we did get another question. When do I need to start charging state taxes?
Charging six. Might need
Yeah,
them to
when do
explain
I
that one a little
need to
bit.
start charging state taxes?
Okay. I might need them to explain that one or explain that one a little bit more.
Okay, let me see if I can, Alyssa, are you able to come off mute?
Good morning. So I
Good
know,
morning.
like, when you're registered with the state,
Mhm.
you have to pay taxes every month or report your earnings, but I don't charge taxes on my product. I just don't know if I should have started already, or do
Mhm.
I just need to start now and then report those earnings and pay that taxes toward the state?
I definitely would definitely go back to, well, you can't go back to January because you've already charged the clients, but I would definitely start now, charging that sales tax. And then just make sure you go ahead and register the business with the state, and then you can go ahead and start charging that sales tax and sending it in.
Thank you.
Mhm. Was there any more, Lucreta?
No, nothing else.
Okay, so we'll move on to the next part, which is talking about some common business deductions. And this is going into when you are working throughout the year. Just some deductions and expenses that you want to think about. Your home office is going to be one of the most important things. A lot of us work from home. I myself do work from home with my business. And so you want to think about, number one, the space that you're working in. When you're writing off your home office deductions, you're going to be thinking about the size of the room, and this is where they're going to get into the square footage. And so they look at the square footage of the entire home versus the square footage of the space that you work in. So let's just say your home is 2,000 square feet and your office space is 200 square feet. So basically, you're getting a 10% deduction on those home office expenses. Now, we talk about the specific expenses. They have to be directly related to the business. So, for example, I do my taxes and bookkeeping from my home, so I'm writing off the percentage of my utilities because I'm here using the lights, here using the gas, here using my Wi-Fi, my internet. I can't write off my cable because it's not directly related to my business. And my business don't require me watching TV, so I can't write that off. None of the streaming stuff I can write off because again, like that's not directly related to it, but the internet is because I'm of course using the internet and the Wi-Fi for my business. So that's just some examples of the home office. You can definitely do the security as well because you that security is part of you working in your home. And so those are just kind of some expenses that you can write off. So those utilities, again, it's only based on percentage, so you can't write off your entire electric bill for the whole year. But what you would do is take your electric bill for the whole year, add those up, and then you'll take that percentage. So if it was 10% for your home office, then you would do 10% of that total for the year. If it was 15%, same thing. 15% of that total for the entire year, and that would be the home office deduction for you. Um, if you were doing, let's just say, I know I got a couple of clients that that have baking businesses. So, for example, that would be, of course, your kitchen. So you probably get a bigger deduction because most of our kitchens are bigger than our small office spaces. But again, that would mean I would probably make sure you start looking at the layout of your home, the kind of the square footage of it, and just kind of put that in your notes somewhere so that when you do your taxes, then you have that information to be able to take the percentage of it. Um, Same thing with the mileage and vehicle expenses. There are apps out there that can keep track of your mileage for you. There's definitely apps out there that you can turn it on when you're getting ready to go to clients' homes or when you're doing business. Now, one of the things you can't do is write off your commutes. If you work a 9 to 5, you can't write off the commute from your job to your client or to the business, but you can do from business to home and back. So we just need to start, the mileage would be able to track from your home to your business. So those are the only ones you can write off. Of course, business trips, those types of things. Um, those business miles you can write off as well. So it's always good to keep track of your mileage, not just your mileage, but your business repairs. Again, we can't do a whole write-off of fixing all 4 of your tires, because if you have, unless that's a separate vehicle just for business, then you can. But if if you have one vehicle like myself that you use for personal and business, then you don't get the full deduction of it. Like your car note, you don't get the full deduction of that. It's just based on a percentage of use. And that could be a little tricky as well, because if half of your time is not spent on your business and personal, then you can't do half. So again, that's kind of a percentage thing as well. Just make sure you're able to kind of explain to the IRS, if asked or if audited, why you would write off the entire car note, if it's not being used totally for business or if it's not a business vehicle. I do have some clients who just go and get a separate vehicle for business because you can write off all of it for that particular business. And so there may be a way to separate it if you have the 2 vehicles, one is for business and your other is for personal. But if you only have that one vehicle like myself, just be mindful that you can't fully write off all of your expenses for that vehicle because you do use it for personal. So you have to kind of look at how much of the use is. Some other common deductions are going to be your supplies and equipment. Of course, any supplies that you get for your business, in your equipment, just kind of make sure that you have a separate account, separate bank account, that you're purchasing your supplies and your equipment with. It's always good to have a personal account and a business bank account. If you don't have a business bank account, at least get a second bank account that you just use for business, just to kind of keep the two separate. Because one of the things that is going to be hard to do is if you ever get audited, the IRS is not really wanting to look through people's bank statements like that. And you don't want to have to sift through every single bank statement and highlight which one was personal, which one was business. And then they're also looking to see like what did you actually buy with that transaction. So those receipts are going to be really important with that business, which is why it's good to kind of keep those bank accounts separate. Some other common business deductions are going to be your software and your subscriptions. Like if you use Zoom, most of us are only using Zoom for business. That's a total write-off. If we're using other apps like Adobe, any other type of subscription, software programs for your websites, those things are going to be some common business deductions. Same thing with marketing and advertising. If you're paying Facebook Market for some things, or if you got an Amazon subscription that you use to help market your products, but your advertising is going to be some common business expenses as well. And then this is kind of what I pulled from my tax program. And again, I'll send this out to the legacy program and they'll be able to send you this PowerPoint. That way you'll get to see, have the notes and stuff from it. But these are just some common tax deductible business expenses. Again, a lot of these are related to your home office. If you have a home office, again, you see the mortgage interest on there. Again, that's related to just a percentage of your business, your square footage of your home. So again, that's that percentage part. Same thing with utilities. But you've got your car and your truck, keeping track of that mileage, contract labor if you're paying your employees, depreciation of any equipment that you purchase, your insurance, if you have a separate insurance on your business, or again, if you're using that vehicle, a certain portion of the insurance that you pay on your vehicle, you can put right off on your taxes. Your repairs on it, again, the repairs, again, all still thinking the percentage wise, the percentage that I use it, if it's 50%, then half of your repairs you can write off for your business. any type of travel that you use. That travel is going to be one of those things that, and it actually was one of those things that they came out in that one big beautiful bill, that they're kind of limiting some of those entertainment expenses. So just be mindful that when you travel for business, that of course, you do get to write off the mileage and the hotel. But part of the entertainment part, you're not no longer able to write off. So if y'all go to like the Super Bowl or something, and you talk business there, you're not really able to write those entertainment type expenses off. So just be mindful of that. Meals, deductible for meals. You don't get the full deduction of meals. You're limited to 50%. So if you are working and you order some McDonald's or Zaxby's or whatever, you don't get to write off the full meal cost. You get 50% of those meals. And then we already talked about the utilities. And then if you have questions about other expenses, I am welcome to answer questions about that. Some things that are not deductible are going to be your personal expenses. That's why I said it's important to keep your personal separate from your business, because you don't want to have to explain your personal groceries. That I know oftentimes we go to Walmart or something and we buying some personal stuff and we buying business stuff, but again, we want to keep them separate, and not purchase them on the same card. So just kind of keep those things separate. Your clothing, for the most part, is not deductible unless, of course, it's related to your business. If you got a modeling business where clothes is important, okay, then that's a tax write-off. If you're doing a photo shoot for your business, then the clothing that you purchase for that particular photo shoot would be a tax write-off. If you're using it for advertising, then it would be a tax write-off. But outside of that, most times, even if you happen to buy a business blazer just to meet a client, that's not considered tax deductible. And then those commuting costs, the cost from your job to that client is not tax deductible. But of course, the journey back home from that client to your home would be the mileage that's deductible. And then any type of fines and penalties that you incur for your business is not tax deductible. So when you are running a business, you want to make sure that you do some good record keeping, some best practices. The IRS can go back up to 7 years in auditing people, especially businesses. So you want to make sure you keep that documentation for at least 7 years. Oftentimes receipts fade. And so you want to kind of at some point try to store those receipts digitally. They have, you got the quickest way would be your phone. Take a picture of it for each year, and keep those receipts stored in like your notes, or you can do a tax software where you take a copy of those receipts and keep them there, unless you keep them in some plastic pouches. Again, sometimes they still fade, especially if you're having to keep them for 7 years. But you want to make sure that you're doing some good record keeping. Keep your receipts in separate folders, have that documentation. Maybe the receipts are digital, so you keep a folder where those receipts are. It's a good practice to do some monthly bookkeeping. Pick a day. I normally do the beginning of the month for the previous month, because most times we do our bookkeeping when people's bank statements come in. And once the bank statement come in, that's when we do our bookkeeping for our bookkeeping clients. And so it's always a good practice to at least once a month, and you might decide to do it weekly, but at least once a month, look at what you've made for the month, how much you spent for the month, so that you're keeping track of your business expenses. That would be the time to kind of separate, find the receipts for it, put those things where they need to go. Maybe put the money to the side for the quarterly taxes. It could be the month where it's time to send in that quarterly tax. And then, of course, at the end of the year, do a yearly review where you're getting yourself together for your tax person, or to be able to do your own taxes. And then, of course, they have tools like spreadsheets. I love a good Excel spreadsheet. I love Excel. That just could be the accounting person in me. But keep an Excel spreadsheet. That would be the easiest thing. If you don't want to go out and purchase a QuickBooks software or FreshBooks or Way or Xero, You can keep everything inside of a spreadsheet, and you can do tabs that has all of your information that you need for either month to month or year to year. So it's always good to just kind of keep that documentation if you've ever get audited. So these are some top tax mistakes to avoid. Not saving for taxes. If you know that your business is really bringing in a lot of money, maybe you've made $1,000 this month or $5,000 this month, or you've gotten till halfway throughout the year and made 10,000, and you have not saved any taxes for it, just understand that there's going to be some tax implications at the end of the year for not saving for those taxes. Even if you haven't paid into it quarterly, just make sure that you're at least taking it out and putting it to a separate account so that you do have it there when it's time to pay that bill on those taxes. Missing quarterly payments, those are some top tax mistakes you want to avoid. That poor documentation, not keeping up with your receipts, mixing your business and your personal finances is a biggie. Using only bank statements without receipts. Again, one of the things I don't want my clients doing is having to explain to the IRS what you spent or trying to think about what you spent because you don't have the receipt. You only have what showed up on the bank statement. So those receipts are going to be really important. I know oftentimes we purchase things online. If it asks for a digital copy, I always say yes to a digital copy and a paper copy. Um, Always get both. It's good to just have both just in case you need to get to it quickly. And then paying cash. Of course, like um, nowadays, most of us are not using cash, but anytime you're paying something with cash, you want some type of documentation to go with it. Always keep the receipt. If you're paying somebody with cash, make sure they send you a receipt that shows that you paid cash to them for something. Um, so any question from the deductions that we just went over or any business questions in general?
Yes, so we have a question about the write-offs. Do you have to have a certain square footage to claim? Um, I have a separate building in my yard for my business.
Yeah, so you're gonna have to know the square footage of that particular building, yes.
Is there a max or min?
There is not, but technically what you'll end up doing is, and this probably goes to like your property taxes, where I don't know if they charge you for having another building on your property. But essentially that square footage gets added to the square footage of your home. And then you would just take that square footage of that building based on the whole thing together.
Got it. We had another question here. My last job, they weren't taking out enough taxes, and then they changed their business to a LLC. Is that legal?
It is, and again, that LLC is just, it is really, they're still, however their business is set up before is probably still set up the same way. Um, them adding the LLC doesn't really change how they pay you. Not sure why they changed the amount that they were paying or taking out taxes on, but you can change your W-4 form anytime throughout the year. And it's always good, a good practice of looking at your W-2 every single year, to see how much taxes have come out and then go back and fill that W-4 form out. But you can fill that form out, that W-4 form out anytime throughout the year. Like you can change your taxes 10 times a year if you choose to. Um, so I would just go back and fill out another W-4 just to make sure that they sent in the correct copy, not sent in, but that they put in the right amount into their system for tax sake.
All right, and then there was a follow-on question about my job wasn't taking out enough taxes. I went back to let them know, and I was told that the taxes were correct. I did another W-2 and added additional money to be taken out, but they never corrected it. Is that legal?
Um, It is, and I would say probably because they all they do is plug numbers into an into their payroll program, and the payroll program does the work. Not oftentimes. Sometimes the payroll people don't really know a lot about the tax part of it. They just plug numbers in and then let the computer do the work. And so the IRS kind of holds us responsible for knowing how much we supposed to be having come out. And there's been this PowerPoint that I have has a link to the tax, has the tax rate on there that kind of gives you an idea of how much taxes you should be paying. And you can kind of use that to go by based on what's coming out of your check and how you fill that W-4 form out. And if you still feel like they're not like either just not putting your W-4 form in right. I would probably ask if you can speak with the person that's over the payroll that put it in, or um, maybe it's the problem on the side of the people that's actually processing payrolls, or it could be a technical question that you might be able to ask the ones that's doing the payroll. I could also take a look at it too for you, just to kind of give you some idea of what should be coming out.
All right. And then we had one last question. I pay teacher assistant $756 per month at our school. If I'm understanding you correctly, she needs to fill out a W-4, right?
They say that one more time.
I pay teacher assistant $756 per month at our school. If I'm understanding you correctly, she needs to fill out a W-4. Is that correct?
So like for tutoring, is that what it was for? Like,
She didn't say, are you able to come off mute for a moment to clarify?
Yeah, I could come off and she
Okay.
spoke a little bit
okay,
before me. So it's not technically tutoring because they're homeschool families. I
okay.
guess say that they're being tutored,
hmm
but we have an actual school.
Okay. And so this is like additional things that they're doing that you're paying for?
Yeah, so she teaches them like art, Black history. Like she teaches them certain classes.
Yeah, so if you're paying them for that, like you don't tell them what to teach, so they're just have their own
But
content.
I do tell her what to teach. That's why I was like, is it more of a 1099 thing?
Do
Because
you
I
do the
do all of
curriculum or they do their own curriculum?
no, I do all the planning and she just executes what I plan.
Okay. It sounds, it could really be both. It sounds more like a W-2 employee that you would be needing to do a taking out taxes for, but it also kind of sounds like it could just be a 1099 employee where you would just need to give them that W-9 form. So that way at the end of the year they can pay their own taxes on that income.
So you would suggest the W-9?
Yeah, I more so the W-9 just because it are they like working 8 hours a day or is it just a couple
No,
hours,
she works 4 hours a day. Well, 3 hours a day.
3 hours, five, is it 5 days a week or?
Yes.
Yeah, I would probably that definitely sounds like more of a W-2 employee just because they're working every day. Yeah.
Okay, so W-2, not W-4.
Yeah.
Okay.
Well, the W-4 is the taxes that they're gonna fill out so that you can take taxes out on them. That if they're just a contractor and you just pay them to do a job, you don't tell them you might tell them what to teach. You're not doing the work for them. But since you are like planning the curriculum and they're just teaching it, then technically they're an employee of yours. So they would fill out a W-4 form so that you can know how much taxes to take out on them.
Gotcha. Okay.
Yeah. Any more questions or anybody want to unmute and jump on and ask a few questions?
We had two more questions in the chat.
Okay.
So the first one, if I wanted to prepare taxes as a business, is there a class or certification I need to take or have?
For business taxes or just taxes in general?
for business.
For to be able to prepare your own or prepare others? Let me make sure I'm
Okay,
getting
she
the
said
question
both.
for both. Okay.
Mhm.
For doing taxes, the only thing we really have to know, well, the only thing we really have to do is just register with the IRS, and they'll give you a preparer pen. If you're going to be doing business with banks, like having money come out of people's checks, that type of thing, that requires registering with that particular financial institution, and then they do have like tests that they give you just to make sure you understand the financial implications of doing business, kind of like you're the middleman between them getting their money that way. But as far as the IRS, unfortunately, no, there's not a lot. Anybody could just do taxes, unfortunately, because you just registered with the IRS to get your practitioner PIN. You do have to do a background check once you first start. And then they'll do that. You have to do that every single year. That's the crux of it. I just happen to have an accounting degree, so I know a lot about the background of the accounting side of it. But as far as doing taxes, no, just register and get your practitioner ID number.
Okay. And there was one last question. The whole site had to pay back to the IRS and the taxes weren't correct until the following year. That's why I knew something wasn't right. So that was a follow-on question to the employers. That question about the employer changing to a LLC and the monies being withheld not being correct.
Gotcha. Yeah, it always falls on us, and just the same as like if someone is doing your taxes, the tax preparer wholly is not responsible for what's sent into the IRS. The taxpayer is, so you are. So it's always good to just make sure, number one, that you do a background check or just kind of do a little investigation on who's doing your taxes. I've had quite a few clients that came to me who taxes I had to kind of fix because of some things that previous tax preparers have done. And there's not a lot that can be done to those particular ones unless they catch some fraud, on the tax preparer side. But 100% you're held responsible for what's on your tax return and what gets sent in because you sign it. If you sign that tax return that's sent in, then you're telling them you know what all is on it. Um, Same thing with your job, like when you fill that W-4 form out and they put it into the system, whether you pay enough taxes or not enough taxes, is they don't hold the employer responsible for whether or not you had enough taxes come out. It's ultimately your responsibility to kind of go back and know the tax rate. And I don't know why they expect a lot of people to know all, because there's a lot of nuance to the tax rate because there's so many numbers on there and so many different tax tables for single people, head of household, married. The tax rates are different for certain income, and there's a lot of knowledge, but unfortunately, they expect everybody to know this. And so you can't really hold your employer, unfortunately, you can't hold your employer responsible for that. You just have to kind of keep looking at your pay stub, kind of assessing what's coming out, put another one back in just to see if they'll fix it. You might have to just write in how much you want to come out if it's still not working. If you know exactly how much should be coming out based on the tax table, you can just write in the amount that you want them to withhold just to kind of alleviate the mistakes on their end that possibly can't be fixed because they may not know what they're doing, unfortunately.
And to follow on with that, I know we were at our hour, but the follow-on question was, so would it be best to put money in another account just in case that happens again?
For now, I probably, because it's the beginning of the year, I don't know if I would necessarily do that. I would just probably go back and fill out another W-4 form, and let them process it, give it another pay period or two to kind of see if they correct it or if it corrects itself. And then at that point, I would probably just write in, do a whole nother W-4 and just write in how much I want them to take out on that on taxes. Because we're just talking federal. FICA's is the same amount, that 7.65%. It's going to automatically come out. So there's no question about that. Not sure what state you're in, but you may have to do the same thing for the state. But as far as the federal, I would just do another W-4 form, um, correct it, see if they fixed it, maybe write in based on how much you, based on the tax table, how much it says should be coming out, and just write it in on the form, how much extra you want to withhold, and then just let it do that way. I don't know if I would necessarily put it into an account and just wait it out.
All right, that was the last question.
All right. So if there's any other questions, you're more than welcome to send me an email. I have a website as well. There's my phone number. Oh, somebody baby kind of wrote over it a little bit on the screen, but there's a QR code that's linked to my business card as well. I serve all 50 states. I'm local to Moncks Corner. I do mostly virtual, but if you need in person, I'm more than welcome to schedule an in-person meeting. I do a lot of in-person for my small business individuals. So, because I know oftentimes you all can't get away from your business, so I'm more than welcome. And there's no fee for me meeting you for business. It's just a consultation fee is it, but there's no additional fee for me just to come to you to meet with you. And I also do bookkeeping and I do taxes. So if you need any services or if you just have any general questions, you're more than welcome to contact me.
All right. Thank you so much, Shamika. That was extraordinary information. That was so good. I feel like I need to pay you right now. That was really good. So we appreciate you and all of the work that you put into this. Please reach out to her and use her services. As you can see, she has a wealth of information. So reach out to her and just use her services for any of your questions here. If you have any questions or if you have any ideas for additional classes from the Legacy program, you can reach out to us. Send us an email at legacyprogram227@gmail.com. And also, we're on Facebook. Like and follow us. We're under My Legacy Program on Facebook. This class was recorded, so that means that we will upload it to our YouTube channel, which is My Legacy Program. Click the thumbs up when you look at this video and also hit the notification bell so you can be notified when we have new classes posted. All right. Is that anything? Any other questions or thoughts? All right. Again, I just really want to thank you, Shamika, for your time. And I want to thank everyone for joining us today. Have a great weekend.